Hey everybody. So today I wanted to do a breakdown on exactly how you can pass funded accounts the quickest and most efficient way in 2025. And there's a lot of different ways that you can go about trading these accounts. For instance, if you wanted to take the slow, steady, disciplined trader route, that's certainly a way that I would recommend if you're new, starting out, just getting into the funded world, or you're not exactly proven to be consistently profitable yet. This video is primarily going to be for traders who do have an edge in the market. They do understand how to trade. This is just going to be a strategy on how you can really churn these funded accounts out and really get the most bang for your buck. And the first thing that I'll get started with is again, you must have a proven profitable strategy. That's going to be the first thing because if you're going into these accounts and you haven't proven that you can, um, consistently take money out of the markets, or you're not disciplined, you go in, you revenge trade every day, every other day, you don't have, that emotional intelligence in order to, um, show consistent profits in the markets, then you will be able to pass these accounts, but you're not going to be able to get any, type of consistent payout. So passing an account is great, but really it doesn't mean anything until you actually start taking money from these funded accounts. So that's just something to really consider before you actually start trading these accounts because you don't want to keep giving all your money to them, right? It can get expensive if you just keep racking them up. Even with a $50 account, right? On Top Step, it's $50 a month and it's great if you pass and it's cheap. You pay 50, you get access to 50K in capital with 2K of drawdown, but you have to pay that $150 activation fee. And so really it comes out to about $200 to get access to around $2,000 of capital, and with all of their um, consistency rules and things like that, their payout rules, if you're not profitable or if you're not consistent, then it's really just going to be a big waste of money and it's going to be a really frustrating time. So again, that's the first thing. Have a proven profitable strategy, and stick around towards the end of the video because what I'm going to be doing is actually showing you the strategy that I used to actually pass these accounts. And then the next thing that I would recommend is you should have a set amount of personal funds that you're willing to invest in accounts. And that goes back to kind of what I was just talking about before, where if you're trading these and you go into trading funded accounts without having, uh, like an idea of what you're willing to spend, then it can be a little bit more mentally taxing than it has to. So when I say have a set amount of personal funds that you're willing to set aside to invest in accounts, what I mean by that is say you want to trade $50 or 50K accounts, and that's $50 a month, $150 activation fee. That is going to come to around $200 total if you pass. So keep that in the back of your mind. If you're trading $50 accounts and you want to get, let's say, five funded accounts with Top Step, the 50K ones, because that's the max you can have, is five express funded accounts at a time, and let's say they're all going to be 50K accounts. That's going to come to $250 total, just to start trading the evals, right? So $250 total, and then after you pass all of those accounts, that would come to an additional $750, right? So it's great if you pass all those accounts, but if all of a sudden you're hit with the activation fee across five accounts for $750, all of a sudden you're paying about a grand to get access to those five accounts. And again, if you're not consistently profitable or if you haven't proven that you're able to take money from the markets, then all of a sudden you're paying a lot more um, than you really should be. And you're going to experience a lot of frustration when you lose these accounts without taking any payouts. And you're much better off going and practicing in a demo before you actually go and do these things. So that's why people lose so much money trading these funded accounts, and it's really stacks up over time. So again, have that set amount predetermined and set aside before. So have an idea of, what you want to be trading. And that can come with experience, right? How much experience do you actually have trading in the market? Um, and things along that. Because let's think of it this way, right? If you go on a losing streak or the market conditions are tough and you're using the strategy that I'm going over in a second here to actually pass these accounts, and you just hit a rough patch, then are you willing to lose, you know, two, three, four, five funded accounts, which can come to 250 bucks, right? If you don't already have that predetermined amount of what you're willing to risk in funded accounts before you start taking them, then losing the accounts is going to be a lot more tough to deal with on your psychological um, it's going to be a lot tougher to deal with psychologically than it needs to be. Okay, so that's why having that predetermined amount is going to be a really important thing to consider. Now, to actually get into the strategy of how you can pass these funded accounts quick, again, it's really simple. You can either trade these accounts very fundamentally sound, like you would a real live personal fund um, trading account, or you can go into this like you're trying to, I don't want to say make money quick because that's not the idea with this, but the idea with this is to, if you are already profitable and you can take money from the markets, then you shouldn't be spending all of this time on eval accounts because really it can be kind of like a waste of time if you already are profitable. So the way that I would go about this is if you don't want to spend all that time going through the evaluation phase, um, the way that I do it is I risk, you're pretty much full porting a funded account in order to reach the profit target quicker. And it can sound bad when you actually say it, but over the long term, it's going to save you a lot of time and likely a lot of money too. Um, And the reason I say that is because say you are trading, for example, a 50K account and you have $2,000 of drawdown. Well, if you want to risk, you know, 100, 150, 200 bucks a trade, yeah, that is honestly probably ideal. It might even be a little bit um, over risking considering you have $2,000 of drawdown. Um, but it's going to take you a long, long time to actually pass that account. It could take a month, 2 months, 3 months. I mean, how many times have you been trading these and you've been trading an evaluation account and you feel like you know, you're trading very consistently, very good. You haven't gone on tilt or anything like that. You've been in the evaluation phase for 2, 3 months, right? Well, all of a sudden you're paying $150 total if it's been 3 months just for the evaluation phase. And then if you pass, you have to pay an additional $150 just for the activation fee. And now it's coming to around $300 just for one 50K account, right? When in reality, you could have gone through multiple evaluation attempts, gotten funded in much less time, and likely spent less money too. So that's why I recommend if you are proven to be profitable and you have that profitable edge, again, I'm going to be covering mine after I break this down, you will be much better off in the long term by just treating the evaluation phase as a gamble. And the way that I do it is I go in with $2,000 of drawdown on a 50K account. I will risk $1,500 on each trade. And the reason I risk $1,500 is because with the consistency rule in Top Step, you cannot have greater than 50% of total profits. So best day cannot be greater than 50% of your total profits. If your total profits needs to be $3,000, well, you can't get more than $1,500 in a given day. You can see my best day right here was 1554. So they do give and take a little bit with that. It's not like a set in stone number, but you can't be going in and getting, like you can't have a $2,000 day, or you can't full port the entire account on one trade, right? So you do need to have consecutive um, winning trades in order to pass these accounts. But I risk the 1500 if I and I go for a 1-to-1. So if you think about it, if you have a profitable edge, getting a 1-to-1 risk to reward ratio should not be hard. Risk 1500 to make 1500. Risk 20 points on NQ to make 20 points, right? You don't even have to be right about your trade and reach full profit target. Say you're targeting like an external liquidity point. Well, your 1-to-1 can be well before that. And if you hit that before even reaching that external liquidity point, well, it doesn't matter. You made your money. You met the requirement of the 1500 for that day. So it's a very, very low hanging fruit threshold to actually achieve, right? So, um, and then say, you lose that trade. You still have $500 of drawdown left, right? Because if your max amount is $2,000 on the account, and you just risked 1500, you lost that trade. Well, now you still have $500 left. You can do the very same thing on your next trade. Risk 500. You can either make 500, you can target a 1-to-2 potentially and make 1,000, and all of a sudden you're still alive, right? And that's actually something that happened to me in this account right here, right? So if we go over my trading right here, started the account on February 10th. The first day I actually made profit was at 871. So the reason that this happened was because a my target was closer than what a 1-to-1 risk to reward ratio was. So it turns out that on this day, I actually ended up having to close earlier and not reach that $1,500 balance, and that I was okay with that. Um, it was bad risk to reward. I risked 1,500 and made 871. But it was still okay because again, I'm not looking for that good, consistent, profitable, good risk to reward trading on these evaluation phases. I'm just looking to um, make the money to get closer to that funding, right? This next day, I lost 700 bucks. So what actually happened was, if you go down here, um, my P&L low for that day was 1664. What I ended up doing was I traded again because I still had that, 400 or 500 bucks room of drawdown on that account. I did exactly what I said before. I risked the remaining portion of that account on the next trade. I hit a good risk to reward ratio and I limited the drawdown to just $724 on the day. I was done trading. All right. And that allowed me to the next day hit the 1500 near, right, 1274. And then on the very next day to finish it out, um, hit for the 1500, right? And then I was actually a little bit below the passing target. So the very next day, all I had to do was risk like 20 bucks, and I passed the account. So really, the whole idea here is to not spend all that time on the evaluation phase. Be okay with failing these accounts and don't let it affect your mental, because this is just it. This isn't good trading right here. Like, right, the P&L, the equity curve, it looks good, but this is way over leveraging on a funded account. In the long run, this is not profitable. Say, on a live account, if you're doing stuff like this on your Express account or your live funded account or things like that, this is not going to be profitable. This is way over leveraging. This is simply just for the evaluation phase so you don't spend all that time and you can rack up as many funded accounts as you can. Have that predetermined amount of your own personal funds of what you're willing to risk on funded accounts, to make the process a little bit easier for you psychologically. Because say I didn't pass this account, right? That's very possible. All influencers you see out there, they do not pass every single funded account because honestly, they're probably doing this strategy right here is they're full porting the evaluation phase and they don't win every single trade, right? So it's very, very it will happen when you attempt this that you will fail these accounts. And that's why you have that predetermined amount of what you're going to risk of your own funds to pass these accounts because the idea of it is risk to reward of your own funds in order to acquire the funded accounts, right? If you are a profitable trader, what this strategy should do over time is it should be more profitable than not profitable. Because if you're getting to the live stage and you're willing to start making money on those accounts, well, you're really not spending a lot on the evaluation phases because you're going through them so quick to get to that funded stage and then being able to capitalize once you're there. This day right here, it could have very easily been a loss of the account, right? Because I was down to negative 1600 on the account. I was only 400 bucks away from losing it. I was able to pass because the strategy that I use has such a high win rate and I've back tested it. I've used it for so long that I know what I'm getting into when I'm trading that strategy. So I know over the long run that I don't have to worry. If you have a super low win rate but high risk to reward, well, then this is probably not recommended for you. You need to have a strategy that has a high win rate. You don't need high risk to reward. You just need to be able to make money and you can go in and capitalize on taking these accounts. So now what I want to do is cover one of the trades that I took on this account in order to pass. It was this trade right here on day 4. So on day 4 right there, it was a $1,500 day. So I want to go in and I want to cover that trade right there. So I have the chart backed up here to Thursday because that's when the trade was taken. And very simply, when I'm opening up the charts for the first time, one of the first things that I'm thinking is, am I bullish or am I bearish? Right? Really simple concept, obviously. And the way that I determine that is, are we respecting bullish PD arrays and disrespecting bearish PD arrays, or vice versa? And if I'm bullish, obviously I want to see the first thing is I want to see a respect of bullish PD arrays and a disrespect of bearish PD arrays. So if I start from the 4-hour time frame right here, actually, you can see that going into the day right here, this is the 6 o'clock candle, 6 a.m. in London. What we have just done right here is respect this bullish 4-hour fair value gap. Right, so I use the fair value gap to help me to determine order flow and do that very thing that I was just saying. Okay, so I see that we're respecting this bullish 4-hour higher time frame fair value gap right there. Right, and if I go down to the hourly time frame, along with that, what we've done is we've swept this sell side liquidity right here, and this is sell side liquidity because this is an hourly swing low, right? On this candle to the left of it, it is a higher low, and to the right of it, it is a higher low. Okay, so we came down from midnight open and swept that low. And so this is what I was expecting to be the London low of the day, because what we've done is not only have we swept that sell side liquidity, but we've also dug into this hourly inversion fair value gap. And I want to also put the idea of weekly profiles in here because obviously if we're trading on Thursday, it helps if we go back and look what the week has already done and what targets are still intact. So on Monday, really not a whole lot. Tuesday, not a whole lot. And the reason that this happened was because Wednesday was the release of CPI. And what did we do on Wednesday? We opened up and we had a really sharp and aggressive move lower to take Tuesday's low into this new week opening gap right here. So that is an important point of um, a bullish PD array right there. We hit the midpoint of it and had a really nice reaction off of it. What happened after we hit that is we disrespected a bearish fair value gap and we are trading above it. And what do we have left intact still for the rest of the week? last week's high, the previous week high. So if I'm anticipating that this manipulation was from CPI and there's still buy side targets intact, being the previous week high as a major point of buy side liquidity, then that's what I want to target. Okay, so now going into Thursday, again, we traded into this inversion fair value gap. So hourly bearish PD arrays are getting disrespected. The 4-hour fair value gap that I just went over is getting respected. And on the hourly, again, we're disrespecting this one right here, this bearish fair value gap, with this close above on this 8 a.m. candle. And then on this fair value gap right here, the last one in the leg, we had a clear close above that and broke this high, right? So now that we've done that, we're disrespecting bearish PD arrays and respecting bullish ones. So now what I want to see is potentially, with this still intact right here, this previous week high, I would want to see something along the lines of this, or going down to the 15-minute time frame, the 5-minute time frame, and looking for those fair value gaps to then get a confirmation on a 1-minute time frame or a 2-minute time frame or something like that. So I'm going to go down to the 15-minute. See exactly what we got. All right, okay, so we traded into this 15-minute fair value gap right here at the open, plunged into it, and again, it's just a more confirmation that we're respecting bullish PD arrays and we're moving higher. We still have the previous week high target still left intact right here. So now if I keep going down the time frame list, right? Let's go down to our 5-minute. I'm waiting for a clear 5-minute fair value gap to form, and I want to see price trade into it, just like it did right here. And this is where the trade was formed. Okay, so we have our 5-minute fair value gap right here. After coming down, trading off of that hourly inversion fair value gap, and also after trading off of this 15-minute bullish fair value gap. So everything right here is telling me that the market is bullish, and we've now engineered even more buy side liquidity at that previous week high right here, because we went up, failed to touch it, created this fair value gap, and now we're trading down into it right here. So with this 5-minute fair value gap, what I want to do now is confirm it on the 1-minute or 2-minute time frame by looking for an inversion on that time frame. So if I go down to the 1-minute right here, we could see that in the midst of trading down into this 5-minute fair value gap right here, what did we leave? We left this 1-minute fair value gap right here. We've taken out this liquidity right here. We've retested into this hourly inversion right here. So now all I need to wait for is if we can trade up and get a close above this fair value gap right here. I would want to see it used as inversion, with in mind that the previous week high right here is still the target. Okay? So we wait, and we get the close above. Right? Let me back it up here. We get the close above. So now I'm entering off of a close above this fair value gap. It doesn't need to come down and touch this, set a limit right there to then go higher. I want to trade with the momentum. I want to get my my fill in, right? So I'm just market executing off of that right here with a stop loss below around these bodies right here, because I don't want to see price come and trade below this 5-minute fair value gap, that midpoint again, right? The damage has been done with these wicks. We should continue higher. And remember what I said about using the or the strategy with the funded accounts is I'm not looking for a really good risk to reward, right? I don't need to hit a 1 to 6, 1 to whatever, 2R up here, right? All I need in order to pass the account is a 1 to 1, risking 1500 to make 1500 with that daily win limit, that consistency rule, right? So all I need is a 1 to 1, risking 24 and a half handles to make 24 and a half handles. And if you notice, price doesn't even need to get to the previous week high right here. It can, but with my risk, I don't need it to. So I'm buying here with a stop loss below here, get to around 1500 and take profit to that 1500 right there. And it hits, right? So you can see that whatever strategy you're using, you just need to have an edge in the market and you need to be able to play the game of the funded accounts. I'm not recommending this type of behavior, this type of over leveraging on a live account, your own personal funds. I'm not even recommending it to you at all. I'm just telling you what I do. Again, it's not financial advice, and it's just a way to actually um, get in, get your funded account, and get to that live stage where you can actually get in and make that money. Okay, so I hope this helps. Hopefully, you learned something, and good luck to you.